We got a little bit of a flavour just there with Brooke before the get-go. Julia, more of the same? Any surprises? Anything the market might not have been factoring in?
I guess it's a positive that we've seen that Dreamliner effect flow through, but really if we have a look at the ticket prices, we're seeing it coming under a little bit of pressure, and we know that competition is quite big in this area, so we'll be watching for Qantas's reaction. In today's market, I think things are going to be a little bit different in that we do see the first index options expiry for the year, so we are going to be watching some potential volatility in terms of the market. So we may see that it's not just earnings season that's playing out on the market today, but also expiry of those index derivatives.
There's strains of a strategy that ran the other way for AMP, Julia, with the AXA assets. The jewel in the crown was said to be the Asian division. They waved goodbye to it, but they've still impressed today. Walk me through that one.
We did see AMP coming out and beating expectations. The underlying profit actually up by 5% at $955 million. We were expecting to see $926 million, so a positive there for AMP. In terms of the net tangible assets as well, we saw it rising to $1.33, and that's from 88 cents previously. And there's been a number of factors that have been moving in AMP's favour. As you mentioned, the synergies coming through from the acquisition still continuing to flow, and we're expecting those to continue to flow until FY15, although we will see it start to taper off. But if we have a look at its underlying business, we know that the market has been rising, and that's good news for funds under management. It's good news for inflows. Also, we're going to see some compulsory superannuation changes this year, and we're going to see the compulsory super amount increase from 9% up to 9.25%, and of course the falling interest rates, which is seeing investors switching into more riskier assets like the equity markets. So all in all, a very strong result coming through from AMP. Having said that, though, the shares have run hard. The shares are up 20% in the last quarter. So going into this result, we have seen the shares running quite hard. So I don't think we're going to see a massive reaction in terms of the market today.
No, to get this rally into the next phase, it can't all come from financials, Julia. We've said that before.
I guess that's a concerning thing about today's performance, that we haven't seen the commodity prices keeping up with this risk on trade that we've seen throughout the globe. Or we've seen the S&P 500 near those 5-year highs, the Australian market doing extremely well with the fifth consecutive week of gains this week. One area that hasn't been gaining, in fact it's been showing considerable weakness, is the commodity space. We saw gold prices down quite significantly overnight. Oil price was down by more than 2%. We saw copper prices down by more than 1%, and that's after a plus 2% in the previous session in New York. So if we have a look at commodity prices, I guess the important thing that flowed through overnight was that FOMC minutes coming through, and there had been discussion about tapering off or ending quantitative easing, and we know quantitative easing has been bad news for the US dollar but good news for commodity prices. So really talk of quantitative easing tapering off has not been good news for commodity prices overnight, and we know that commodities is such a big part of the Australian share market. So expecting to see that materials, that energy space coming under pressure. We've seen some of the big miners now reporting their earnings, but we haven't seen some key technical levels for the likes of BHP being triggered. Woodside Petroleum has been doing well, but Origin, with this downgrade today, they've downgraded their full-year earnings down 10 to 15% on an underlying basis. Two concerns in terms of Origin: their underlying energy business. It looks like wholesale prices are quite high there in Queensland, and that's really weighing on the company's earnings. But also investors have a huge concern about these big LNG projects. Now, the Asia Pacific LNG project, which Origin Energy is involved in, you know, investors are worried about cost blowouts. Now, Origin has come out today to say that they expect a peak investment of $4.4 billion, but that's up from $3.6 billion that they were saying in just July last year. Now, they have hosed down expectations around a capital raising, and that's one of the concerns in the market, saying that they do have sufficient liquidity. But this is an area that the market's watching very closely, the cost blowouts at some of these large mining projects. So watching that commodity space very carefully, and it is of a concern because while we have seen risk on many other assets, commodities do look like they've been left behind a little bit.
There's